Hey everybody, and welcome to another episode here at Tribal Trades, the daily show coming at you from the great state of Florida. One hell of a drug. And I do want to welcome you to the channel wherever you are tuning in from around the world. Thanks for watching. Today we're going to ask the question, is there any hope for a bull run, or is it over? What kind of hope is on the horizon? We're going to talk about that and a whole bunch more. Before we do that, smash the like button. This does help get the channel out to more people. It does help support the channel, of course, as does your wonderful comments that you leave. Thank you so much for that. And those who ask questions in the comment section, I do get back to those as soon as I am able to. However, if you'd like more immediate engagement and interaction with me, you can find me in the Discords. Those links are below. That information is below in the description of this video. You might need to click on the more button there and it will pop out. And there are 2 Discords there that you can sign up for, where I share education, insights, resource, some of my trade setups, and of course, entertainment, because this is not financial advice. I'm not a financial advisor. This is for education and entertainment purposes only. Are you not entertained? All right, so let's look at some of the news. I'll take you to my own X at the moment. A little bit of humor there. The Bitcoin halving every 4 years. My portfolio is a halving every single week. And of course here, use a stop loss, and then you won't have your portfolio being halved every single week. Have a strategy to get out of the market. And the people that are in pain right now are twofold. Number one, there was no strategy for the upside for taking profit. When were you going to take profit? We're going to try and time the top exactly what they say. Bears make money, bulls make money, but pigs get slaughtered. Okay. And so to learn from the situation, the next time we are pumping and we are green, is to lock in those profits and have a strategy. You know, I share in all my videos and teaching and education series that I look to take the original capital off at 3 to 5x. You might say, well, it didn't get there. You can stop out in profit. And I was on the show with Larry Jones and Josh last night, and the Spy Lord who came in and made a cameo there. But we were all talking about it, and Larry made a very good point, and he said, stock up with Larry Jones, he said that a lot of times he stops out in profit. People think about stop losses and, oh, I'm stopping out in loss, but a stop loss can be also to stop out in profit as well. So I would say this, that even if it didn't get to that 3x or 5x, you can still stop out in profit as it's coming down and say, hey, I don't want to lose any more or give any more back for that. And then secondly, there wasn't a stop loss to the downside, like if you're going to go down from break even in your portfolio, or to a point where, hey, this is the most that I'm prepared to lose. And some of you might say, oh, I'm not prepared to lose anything. I'll just wait for the next bull run and hold them through. And that's fine as well, as long as that's a strategy and you had a strategy, because the World Liberty Financial don't seem to have any kind of strategy. They're just buying randomly, and they are down $110 million already. They've used $336 million worth, and that's now worth $226 million. So they just buy the dip that keeps dipping, and that's not one of my trading principles. Now, some good news is we do have a CME gap. What does that mean? Is that the CME markets close Friday, reopen Monday evening, and basically, if there is a price differential, it'll create a gap. What that could mean is that we come up and fill that gap, and that's generally what does happen sooner rather than later. It has been happening. These gaps get filled. So we could push on from 81 up to around that 85, 86,000 area there. So be prepared for some move to the upside, but it could be short-lived there. Now, of course, we have Trade Travel Chill points out here there's no real significant buy orders on Bitcoin until around $70,000 to $72,000 there. We also have the Bitcoin Insider Whale that is also shorting again. Should we be worried? Yes, maybe. And then, of course, we should look for some bullish divergence to develop as if Bitcoin forms lower lows on the price action and higher lows on the RSI for bullish divergence to happen. That's something that we need to keep an eye on. Okay, so let's go over to the charts here. And you can see that, if you just have these key moving averages in here, and we just have to adjust them every day because they do move, And so I do draw these trend lines, and I show how to do all of this in the Tribal Trades Discord. It's how to set up your charts, how to add all the different indicators that I have on there, and also teach how to make money on the way down as well as on the way up, because you can make money on the way down and on the way up. You could have been making money shorting and buying at 95 and then selling down here at 83 or 82, and you could have made money on that move, and not just on Bitcoin but on any of the altcoins, teaching the community that we don't have to be fearful when the market is going down. We can be making money on trades. That is something, if you're interested in, there are links below to sign up for the Discord there. You can click on that link and get started, because you don't just want to make money when the market is going up. You also want to be able to make money when the market is going down or when the market is going sideways. And we need to trade the trend. Right now, the trend is down. The trend is down because we have lower highs and lower lows. Okay, so we want to trade the trend, and when the trend is down, we want to trade and make money on the way down. You all know how to buy a coin at $100 and sell it at $120. Well, then you can certainly buy a coin for $100 and sell it for $90 or $80 and make money. And if we are going into a bear market, then this is the only way you are going to make money to the downside. Also, you have to remember there are some narratives. So is there any hope for the bull run? Yes, of course there is. What is the hope for the bull run? Well, number one, the tariff war ends. That will rebound the market immediately. Then inflation cools off and continues to cool off, and therefore the market is going to like that and move up. That there are some rate cuts as a result, the market is going to like that and move up. That there is quantitative easing because unemployment continues to rise, which has been happening, and that's our first little sign of maybe the dam beginning to break. But how long is this going to take? This could be resolved within the next week or months, but I think all of these factors, and Doge cost cutting, they continue to cost cutting, taking liquidity out of them. That's going to cool inflation, by the way. And therefore, I do think we can have some kind of an upside. Now, what is that going to look like? Well, first of all, we have to navigate any further drops to the downside. We had the 50 EMA on the weekly sitting just a touch under $77,000, and the 50-week moving average sitting at around 75,400. Now, historically, in the last two bull markets, we needed a full candle close and open below the 50-week moving average. So you can see here at the 50-day moving average, we had a full candle open and close below. This was not a full candle open and close there. So the whole body of the candle is underneath. So if we get a whole body candle on the weekly time frame, historically, that has signaled the end of the bull run and that we're going into a bear market, just like we saw here. But, I've also thought, well, also around that $73,000 level here is the previous all-time high from March, or around that area. And of course, we have that previous all-time high at 69. So I think a wick down into this area would still be okay. That would still be all right. Bull market would still be back on, but we don't want to see a full candle open and close below that 50-week moving average sitting at 75. We may not even get down there, but in the last drop-off in April and May of 2021, we did come down and tag this. I think we had one candle that closed underneath us, and of course the 50 EMA on the weekly also was tagged, of course. So this little area here could be a nice little buy the dip opportunity. This could also, but just be careful we don't get a candle below. People asking, where would we go if we went to the bear market? Traditionally, we've gone to the 200 weekly moving average, which is currently sitting at 44,800. Of course, I would expect this to slowly move up, but if we go into a bear market from here, it's still going to be in the $40,000 range. Maybe it gets up to 47, 48. Now, if we move up from here and we go to 100, 120,000 before coming back down for a bear market, this won't be in the 40s anymore. This will probably be more likely, who knows? It depends how long. It could be up anywhere around these 50s and 60s area, depending if the bull market finishes in November, for example, this year. Okay, the trend is down, but the signal for a bear market is not there for me. Some people are calling for an early bear market, and they've already called it, and you may end up being right, but I'm not prepared to call it. I think we're still more likely to be in a bull market. This still feels more like April and May of 2021, the dip where Bitcoin dipped around 55%. Bitcoin has not dipped 55% yet, so we haven't even gone as bad as that dip. The dip so far would be around, looks like around 28%. If we came down to the 50-week moving average, it would be a dip of only 30%. So nowhere even near to what happened April and May of 2021. That dip was way worse than the one we're experiencing so far. Okay, so I want to bring some perspective there, that just because we're seeing this has happened before, it's just happening a little bit earlier in this January, February, and then maybe we go sideways here into March, and then we pump out till April to come back and retest this 100K level up here. And if we want to see a new all-time high, we do have to break above 100K there. But I'd like to see us back in the range, and I do think we will come back into the 90 to 100K range. Maybe the top is in. Maybe the top is in, and we'll come up here and we'll bang around a little bit, maybe push around and then create a lower low, and then have a final capitulation there. But that's something's possible. Let's look at the yellow brick road. We're going to follow the yellow brick road. Follow the yellow brick road. We're off to see the wizard, the wonderful Wizard of Oz. Liquidity to the upside at 85. That's where the CME gap is. Remember, we talked about that at the beginning of the show. There's going to be most liquidity is going to be to the upside again there around 87, just above the CME gap, and 91,000 there. Could bring us back into the range. That's why I'm looking for to get back into the range, that 90,000 range. You see all this liquidity up here at 100K, loads of liquidity, and on the 6-month time frame, we had that liquidity dangerously down there at around 73, 74,000. But of course, we have a ton of liquidity at 100,000 and also more up at around 110. So wouldn't it be interesting if we came back up at least to that 100K level and retested that again? I would be surprised if we didn't come back and test that at least one more time. If this is going to go into an early bear market, that we wouldn't come back and retest that one more time. But we do need to break above the $90,000 level. And you can just trade this level to level. Look, teaching people how to go short here. This was a short that I gave. I gave this short in the Discord. People made money on the way down. I gave this short in the Discord. People made money on the way down. You can short the market down to the 50 EMA on the weekly or the 50 moving average. You can also long it. If it was to break above the 200-day moving average, you could open up a long position up to the 200 EMA on the daily, or the 20 EMA on the weekly, or the 50. You can just trade this literally level to level. If we break down from here, you go short. If we break down from here, short. If you go down here, short. And I said to people, if you lose 90,000, what was going to happen? If you lost the 20 EMA on the weekly, I said it's going down to the 200 EMA and the 200-day moving average. Those that listen made money on the market going down, okay? And then, of course, you can make money on the market going up. If we have a bit of a relief rally, we can open up a position at the 200-day and take it up to the 200 EMA on the daily, or the 50 EMA on the weekly, or if we get all the way back up to the 50-day moving average. And really, this is what Josh says. He feels that if we don't get back above the 50-day moving average sitting at 95,000, that probably the bull run is over. Now, I'm not prepared necessarily to say that, but of course, there shouldn't be anybody that if we have a rejection here, this would be a good place to exit positions right here. If we came back up here and rejected, it would be the same if we came back up here and rejected around this 100K level. You could get out of positions there on a rejection as well. And of course, those of you may be able to get out of some positions here if we get a rejection at this 90,000 level. It's all about having these levels on your chart. I teach you how to do this in the Discords to make sure that you are learning and you are trading this, number one, level to level, and number two, that you are opening up and opening the right kind of trade. We don't want to open up the wrong kind of trade and buy a dip that keeps dipping and your altcoin suddenly is 90% down because we're in a bear market when you should have been buying and selling on the way down and making money. This is a trade where we open a position here and we go short, and that the market goes down, and then we're able to take profit here down at 89 rather than buying the dip and then buying the dip and then buying the dip and then buying the dip all the way down, and we're in huge loss. We flip it and we are in huge gain. And I'll add to that here that this can work on the way up. We want to be trading the right ways. We want to be going long when we should go long, and buying and taking profit on the way up. And we longs an uptrend, we want to be buying shorts on a downtrend. We want to be trading the market correctly. And if you want to learn how you, and listen, you don't have to be a day trader to do this. You could have opened up a short position here back on Monday, the 24th of February, and you could have closed that in profit today, down a couple of weeks later on the 3rd of March there, and you put stop losses in just like you do on the way up. Well, I appreciate you all tuning in. Thanks so much. And of course, until the next episode, or until I see you on the Discord, happy trading.